Fools, the end of the year is almost here, and that means it's time to start thinking about your taxes. I know it seems early, and a lot of people don't really start thinking about them till April, but the sooner you start to plan, the easier it'll be to save yourself money at tax time. My name's Dan Kaplinger. I'm the Motley Fool's Director of Investment Planning, and today I want to talk about 3 ways you can boost your deductions so that you won't have to pay as much income tax when you file your return early next year. Now, the key to remembering, understanding the whole point of taking deductions on your tax return is that those deductions ideally reduce your taxable income on which your tax liability is calculated. And so every extra dollar that you get in deductions saves you a fraction of a dollar according to your tax rate on the amount of taxes that you pay. And so being able to maximize those deductions is often the best way that you can use to reduce your overall taxes. So how do you do that? Well, the first and most obvious thing most people should consider is contributing to a traditional IRA. Now, most people are eligible to deduct the full amount that they contribute to an IRA up to the maximum amount off of their tax returns for 2013. Indeed, IRAs are very flexible about letting you do this. You can make contributions up until next April 15th and still have them count in the 2013 tax year. So that's something you can definitely consider going forward. Now, second thing that you should consider doing is making gifts to charity. Basically, any gift that you make is eligible to a charitable deduction as long as the charity qualifies for deductible contributions. So that's something that you can check with the IRS website to make sure the charity that you're giving to will help you qualify for that tax deduction. But it's something that is important to remember, and indeed, any gift that you make before December 31st will qualify. Indeed, a lot of people, what they do is they'll use a credit card, because in a nod to companies like Visa and MasterCard, charities are eligible to let you take that tax deduction even if you don't end up paying off your credit card bill until the next year. So it's a good way to bridge that yearly gap. Now, third and finally, one thing to consider is you actually have the right to prepay certain deductible expenses in 2013, even if they're not due until next year, and still take the deduction now. A lot of people do that with items like state income taxes, with property taxes, basically letting you pull those deductions into 2013. Now, the thing to be careful with taxes, though, is that if the alternative minimum tax applies to you, then you might not get a benefit from doing it. So be sure to check with your accountant or look at your return and make sure the AMT won't apply to you. But basically, any of these 3 steps can help you increase your deductions and cut your tax bill, which is definitely what you want to do as you get ready for next April. Now, for more on tax planning, making sure you don't pay the IRS any more than you have to, be sure to stay tuned to Fool.com for more tips. My name's Dan Kaplinger. Thanks for watching, and Fool on.